All right, guys, Ryan Hawthorne here, local realtor here in Northeast Louisiana, and now serving some of Northwest Louisiana, and been selling real estate here for about almost a decade now. Time is flying.
Man,
Uh, yeah, absolutely. It's been a fun ride, and I'm more encouraged about the journey and the industry now than I ever have been. It's a slow grind to get there, but staying with it, and it pays off huge. But yeah, one of the I get asked all the time about financing questions. I have worked with a lot of buyers. People call me, and they have a myriad of questions they always ask me. It seems to be three or four different questions about financing. People don't understand it. They don't think they're qualified, or they don't know the right things to get qualified. So they end up renting, and don't realize they could buy actually. And so I brought on here a guest here with me to kind of talk about that. He's a mortgage advisor in North Carolina. I think it's Durham, North Carolina.
yep, exactly.
And
Durham, North Carolina. They call it the Triangle, but it's pretty much Durham, is where I'm
yeah,
based out of.
okay, okay, good. Yeah, a lifelong friend. We've been friends a whole lot longer than we've been in the business. But I wanted to bring him on and just answer some of the questions that I get all the time, and maybe Steve, you can introduce yourself and kind of tell us what you're about and who you're with and all that.
Yeah, awesome. Thank you, Ryan. I appreciate you putting this together and taking the time to do it. And all those who are watching, thank you for watching and kind of going through everything. I'm out of Durham. I've been lending for about 5 years. Before that, I was a financial crimes detective and crisis negotiator. So I've seen a lot of the financial side of things, and that's what led me into lending to what I do now. And I'm licensed in all 50 states, even though I'm based out of North Carolina and Durham. I do a lot of lending all over the United States. So excited to get into these questions and help somebody out today.
Yeah, absolutely, great. So absolutely, and I'll just kind of start out by saying that, of course, one of the things that has been on everybody's mind here lately is, interest rates. Well, I say here lately, it's actually been on people's mind for like a couple of years now.
Yeah,
We went from like, you know, everybody was buying at 3%, three and some people I even hear was getting like two and a half,
yeah,
I guess, but and houses are flying off the shelf you just put a sign in the ground or posted a ad on Facebook and it was gone. and
yeah,
and then so we went through that crazy ride, and then like 2 years ago the brakes got hit. So it all of a sudden we were looking at literally doubled and tripled overnight, and the $250,000 home, for example, somebody could buy, all of a sudden went to 175. Same house, same everything. So,
yeah.
but yeah, and then over a period of the last few months, I mean, rates have you know dropped some. We were hanging seven. Well, you know better. I mean, 7 and 8%, and then now they started tipping down to where I've seen some fives, or low sixes, high fives. So, what do you think? Do you think the rates are going to continue to drop, and what do you think about the interest rates?
Rates are what basically, are going to really determine our market. And it's been a roller coaster ride, as you said, for the past couple of years. It's been very hard to predict, and there's no way that I could predict what's going to happen. But I can give you some ideas based on what economists are saying, what different people in the industry are used to seeing in this type of year. Obviously, it's been an election year, a lot of
Yeah,
volatility with that as well. So you're looking at a lot of different things that impact the market. One thing that people don't know about is interest rates are really determined by a couple of things. One is going to be your credit. That is the biggest way that you can influence what the rate is going to be. So
yeah,
if the rates are 5%, you may not get a 5% rate because you don't haven't worked on your credit before looking at getting in a home. So it's important to start early in looking at getting into a home. So that way you have time to work on things and you're not last minute trying to catch up. So credit score is definitely going to affect your rate quite a bit, but rates have been, like I said, a roller coaster ride. We were seeing rates as high as 8% at the beginning of the year and some into June and July. They went back down into I would say the sixes, the high fives if you
Yeah,
had excellent credit. Um, and they're ticking back up here just a little bit, closer to the 7.5% right now is what we're seeing. But I would say the biggest thing that I tell people when it comes to rate is obviously be as prepared as you can be. So pick the right loan product, and that's what your mortgage advisor is going to help you with. Show you several different products to look at, show you which one's the best rate, which one's the best option today and over time, and get you in the best position by giving you that advice to do with your credit so that way it's where it needs to be. But
yeah,
what I tell a lot of people too is they say, when's the best time to buy? Should I wait a year because of rates? Well, that's not necessarily the game plan either, because with rates, they're so volatile. What you want to do is you buy when you're ready. That's
yeah,
the important part. You don't time the market, you don't time interest rates. You buy when you're ready. You don't buy too early, don't buy too late. That is the biggest way to build generational wealth. It is the curb against inflation because rents go up all the time, but mortgages stay the
true.
same. So you're going to be in the best position to purchase when you're ready. So how do you know when you're ready? You get with the lender, you get pre-qualified, you look at your numbers and you say, okay, this is how much I can handle right now and what's available on the market, and I'm ready to go. So being a confident home buyer.
Yeah, yeah, absolutely. I can't add any more to that. That's exactly right. You got to buy when you're ready to buy. You can't. It's like trying to time the stock market. When's the rest of you can't. You just got to invest when you're ready to invest. Or and in this case, buy when you're ready to buy. There's no way to time that right. So, well,
And a lot of people
that's
think it's like a stock investment. They think oh, I'm going to time it. But a stock investment is for 3 years to 5 years, or even shorter if you're a day trader. But a real estate investment is going to be 5 years or longer, is what usually people hang on to that. So that's where you're getting that generational wealth, where you're stabilizing your family in a community, where you're doing a lot of those things. So that's what you have to look at.
yeah, yeah, absolutely. That's good. Um, and which I don't. I guess would no reason to touch on that, but I mean, there has been, no matter what side the fence, as they say, you're on. I mean, with all the political and stuff has been going on, people have been in unrest and there's been tension. And I've had some home buyers even just kind of waiting, like we're going to see. But I think that's going to start calming down. It's been a lot of months of this. And so now it's like people, I think, are going to get back out and start buying, looking again.
Yeah,
And
definitely. And with that, if you're wondering about if it's a good time to buy now or if it's a good time to
well,
buy later, we have calculations that we can help you make that decision. So there's a lot of stigma out there about lenders just approving people or disapproving people, and then you never hear from them again. But a mortgage advisor, I try to differentiate myself from that crowd by saying, I'm in this for the long haul. I want you to know when it's the right time for you and what is the cost of waiting, because when rates come down, home prices are going to go up because we don't have enough supply and demand
right.
in the market. So it's supply and demand. So it's important to know, do I buy now if I'm ready, or do I wait a year or 5 years? We're going to share that with you so that way you know what to do.
Yeah, yeah, absolutely. Yep, 100%. What I was gonna ask you, or switch, not really gears, but on a lot of people, one of the questions I get all the time is, first time home buyers, they, want to know. I get this question all the time. Does this home qualify for our first time home buyer program? And so there's all kind of misconceptions on that. People, I mean, oh my goodness. So what exactly is a first time home buyer loan?
That is a great question, and a question I get quite a bit as well. They're like, I want the discount. And I
Yeah.
said it. I want the first time home buyer discount.
Yeah.
And there's no necessarily discount out there. There's four loan types. There's FHA, USDA, conventional, what did I say? FHA, USDA, conventional, and VA, veterans loan. So
Yeah.
then that's what banks offer. So what with those are going to be the best program for you. The best one for a first-time home buyer who hasn't been saving a whole lot is the one with a minimum down payment. So what happens is with an FHA loan, the minimum's 3.5%. If you're getting a conventional loan, the minimum's 3%. If you're getting a USDA loan, it's no money down. If you're getting a VA loan, it's no money down. So you have to say which one of those is going to work best for me, because necessarily putting no money down is not necessarily the best position all the time because your payment's a little higher.
Yeah,
So you kind of got to average out what your goals are for your home. Is it having the lowest monthly payment? Is it being in a rural area where we can use a USDA loan and still put some down if we wanted to, even if it doesn't have that requirement? But what changes, where the first time home buyer idea came from, is a conventional loan always had 5% as their required down payment. With when you're a first time home buyer, and you could have bought a home in the past, but what qualifies you as a first time home buyer is somebody who has not purchased in the past 3 years, and that lowers that 5% to 3%. So it gives you a little bit of a break on that. So that way you can get over the threshold of saving up for the down payment and having those closing costs as well. So that is basically what the first time homebuyer program is. It's lowering that down. And on the other side, it's if you're an FHA loan product, it allows for higher debt to income. It allows for lower credit scores. So a lot more
right.
bumpy, scratchy type of things that, I want to get in a house, but I haven't done everything perfect in the past couple of
Yeah,
years. That's fine. There's a loan product for you out there, and that is a great first time home buyer product.
yeah, yeah. Because that is the very essence of it. A lot of times, I mean, if you're a first time home buyer, it's very common you don't have the greatest of credit, you don't have an established credit, you don't. So yeah, I mean that makes sense. But which is what it's for versus somebody that's been buying houses for 20 years and they've got a 800 plus credit score and they've been, but the person who has just got a credit card in their name or bought one vehicle maybe, and they don't have a
Yeah.
lot of established history, that's for them,
Yep, exactly. And they move up through time. They become that sophisticated person who buys a home, but the first time buyer may end up getting an FHA loan with 3.5% down, use that for 4 or 5 years, then move up in house, and now you're ready for a conventional loan and you have worked on your credit and you've shown that history. So you move up through the ranks of credit and
Exactly.
loan products as you go.
Yeah, yeah, absolutely. Um, and as far as speaking of like down payment, I want to touch on this real quick because what's crazy, or sadly, I say, is I deal with a lot of people. I come across a lot of people that they even, and it's just, hey, the economy we've been in, it's been tough for a lot of people, and so they even struggle with the 3.5% down,
Yeah,
even, and that's a very low, barrier to entry to get into a home. But they
right.
even, some, just because of the cost of everything and the world we live in now, it's very, difficult. But are there some programs where they actually can, like a down payment assistance where they can finance their down payment? I've heard of that. Is that true?
Absolutely. There's a lot of programs out there. And I'm going to kind of split the two a little bit because there's down payment assistance and there's grants. A lot of times those get put together, but they're two separate things. So down payment assistance for, let me see, I looked up here in Louisiana, it's going to be the Louisiana Housing Corporation is going to offer
Okay.
down payment assistance. If you want to go on their website and check out, do I meet those requirements? Because they do have requirements and stuff like that they want to look at. Um, that you as a home buyer, a certain credit score, a certain debt to income ratio. So there are going to be certain qualifications for that, but they're not difficult to get into. But kind of the difference between uh, down payment assistance and a grant. So down payment assistance is where a separate company comes in and they offer you down payment assistance. Now, it's not offered to everybody. You have to meet those qualifications. They don't want investors taking over this money that they have allocated for it. So you have to they have different requirements. You have to live in the home a certain time. You have to do different things, and there's second liens on the homes. There's a lot of times some of them have interest bearing where you pay, 1% interest. Some of them have no interest, no payments while you use it. So it all depends on which program that you go with. And then there's grants, which is the other side. I fall more on the category side of a grant because
Yeah.
those don't have as strict requirements and it's money that you don't have to pay back. It's exactly what it's called. It is a grant that gets people into homes. And that's what I offer more of is a $15,000 grant to help people get into homes. So there's two
Wow.
sides of it. There's a side that you can go to the down payment assistance side. It's probably more predictable, more available because grant money comes and goes and it's very
Yeah.
volatile. Sometimes they have a lot of money, sometimes they're using a lot of it, so it may not be available. But you have both of those options to get into a home, so that way you can stop renting and start building wealth through real estate.
Yeah. Yeah. Because that's what it's about. I mean, if you can, so many people I see, they just think they're going to be a renter for the rest of their life. And I'm like, and then they end up getting a credit pull and they're like, oh, there is an option. I can buy. I'm like, oh, they've been renting for 10, 20 years. Some of them crazy
Yeah.
amount of years. They've been renting, just never, they went to their local bank and their local bank said, we need 20% down, or no, we can't finance you. You need, and they never saw, they just stopped right there and never went and tried to see if there was another option. I run into that all the time.
So yeah, you're kind of making that same case versus the lender saying thumbs up, thumbs down, you're not a good person, and a
Yeah.
mortgage advisor saying, hey, you may not have everything together right now, but if you do these three steps in
Yeah.
6 months, in a year, you will be ready to go.
Yeah, yeah, exactly. That's the difference between somebody like yourself that can help somebody with those type of programs versus they go to their local lender. And there's a place for that, I'm sure. If you're going to um, going to buy a vehicle or a boat, or in Louisiana here, everybody's like financing boats, lawnmowers.
A
Yeah,
four-wheeler, man.
yeah,
You got to get the
exactly.
latest and the greatest, right?
Yeah, yeah. But I'm like, oh man, everything. I'm like, but I tell people all the time, like, you might not want to get, yeah. I said, but don't go there when you're going to buy a house. I'm like, if you want to buy a house, I'm like, so, I mean, but anyways, we still have people around here, that still want to do that. They've been dealing with that same banker for
Yeah,
50
and I
years.
get it, and I get it. They're comfortable. You want to work with people that you know, like, and trust, but you also want to
Yeah,
get some outside sources to say, hey, maybe something I haven't thought of, that I can get some help with. So definitely for sure.
yeah, yeah, yeah. I tell people all the time, like a good place to finance all that. But if you want to get a home loan, go seek, and they end up, a lot of time most people do, and they're like, man, didn't realize there was this much stuff that, that you could tap into. But
Right.
um, yeah, absolutely. So yeah, you know, those were the main topics that I wanted to cover real quick. Was like I said, I mean, the 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 interest rates. I mean, those are the ones I get all the time. I don't
Yeah.
know, is where's the rates? Where do you see them going? Nobody can predict. Again, nobody can predict that. They're with the interest rates. Again, you just gotta buy when you're ready to buy. Just go ahead and do it, and take the plunge, and then the down payment assistance, and then the first time home buyer program. Because I did one where they went straight through the government, and the money was there at a certain time of the year, but it was difficult process. But people think that is so. I'm glad you clarified that too. Like, hey, that's the first time home buyer is these programs, these four loans: FHA, VA, USDA, which is rural development around here.
Yeah.
That's a very common one. We're such in a
Yep.
rural area, and
And a lot of people don't know that using a rural development, you can buy a trailer with it. A lot of people don't know
yeah,
that. It just has to be brand new. It can't be used. And you can get into a very affordable home if, your goal is to have an affordable home. That is a great way to do it.
yeah, right, right. Because you can a lot of times buy. I sell a ton of mobile homes around here because it's a it's affordable. They
Yeah.
can. they can't afford a $300,000 house, but they can get what they want really for half of that price,
Absolutely.
or
Yeah.
sometimes less, but because I think the year's like 2006 cutoff for USDA or
It
something.
changes. Yeah, it changes every year. So you just have to be, if you, well, you can't buy an older trailer with USDA. It has to be
Yeah.
brand new. So if
Okay.
you're
Yeah.
if you're going to buy a used trailer, you're better off going with an FHA, VA, or conventional loan. And the cutoff is going to be about, 1976. So
It's
that'll
which
go way
is
down there.
crazy.
Obviously, you're going to have more problems the older it is. So you want
Yeah.
to buy something that's going to be pretty decent that you're not having to drop a bunch of money into, but it does go down that far. So you have that
Yeah.
option.
Yeah, yeah, exactly. Um, yeah, because speaking of that, I'll get off of that real quick because but the mobile home does a lot, and not just manufacturing home, but also a lot of people, it's if it's older, it's got to be yes, it's got to be in good shape because what you got to realize is it's not just the age, but there can be certain things, that FHA appraisers required. So you had to be careful there. I mean,
Yep.
it can't broken windows, peeling paint,
Yep.
rotten wood. There's so many things that you can't just go finance anything. You got to be careful there and look out for that. You know.
And while on my
But anyway,
social media, I even put out, I think it was Monday, I was talking about VA loans. It's like a lot of people get the house ready, but the shed, the
yeah, yeah,
barn,
yeah,
all of
right.
that stuff has to be painted. It can't have peeling paint, broken windows. So you don't think about that stuff automatically, but a good realtor like yourself knows that stuff and can guide people into those exact properties that they're looking for that are going to qualify.
Yes, that's important to know to have somebody on your side to pat myself on the back. A good realtor says, "Hey, yeah, there's so many things or pitfalls you can get into and you don't know it, and then the appraiser comes, you're like, oh, you got to go paint this shed like you said. I've had all this happen
Yeah.
recently, and you got to go, fix this, fix that, fix this. So having somebody to guide you there through all that so you don't get land blasted at the end of it is
Yeah.
important.
Very, very important. Keeps the stress level way down. Keeps the gray
Yes,
hairs away.
yes, which mine are coming a little bit. I don't know.
One thing I do want to add, I know
Yeah,
we're running a little bit on time, but I'm trying to be mindful of that. But is
sure.
overlays. So overlays are a banking term that basically mean what a bank will require. So the four loan types, those have guidelines, but banks on top of that will have their own guidelines. So if you
Well,
get denied from one bank, just like you said, they'll go down to 2006 on trailers. Well, that's a bank requirement. That's not necessarily a loan requirement. So if you get denied by one bank, it's not you're just completely denied. Go find somebody else, a broker that deals with several banks that can say, hey, I can see where they'll deny this, but we won't. We have a lender that will lend on this type of property or outside traditional financing. For example, self-employment people have a very difficult time financing because good business people write off everything, as much as they should, to make their businesses operate and to give back to the economy and to give back to people to have jobs. Well, they have a very difficult time getting financed. So we
right.
have bank statement loans that you just use your bank statements, no tax returns, and you get financed. So just outside of the box things like that to get people into homes. So think about those overlays when you're going to buy a home. Just because you've been denied before doesn't mean you'll be denied again if you find somebody, a mortgage advisor that's going to really walk you through those products.
Yeah, that's a good point. I have seen that where one bank, like you said, that's a very good point, where they're denied and they don't think they have another shot. And then I've seen where they go to another bank and they're like, I got approved. I'm like, yeah, that's so, not all lenders are the same,
Yeah.
for sure. Yeah. If they were, we'd just have US Bank on every building. I mean, and that would be it. Everything's the same. But well, good. I think, yeah, I appreciate you, coming on today. And I think I don't know how long we've been, but anyways, I think that's I think we can wrap it up there. And I know people's attention span is not the same as it used to be.
So yeah, if you've
So
hung on this long,
yeah, if
kudos
you
to you. You
exactly,
definitely looking to
exactly.
buy a house.
You're Ty- yeah, put your info below. Speaking of that, I'll drop it your info in the comments in the description.
Yeah,
But if you tell everybody, if you do you want to give out your phone number, email, or whatever, how they can get a hold of you, and of course I'll drop
absolutely.
it below.
Okay, yeah, absolutely. My name is Steve Medina. My cell number is 919-985-3076. And you can look me up on social media. I have everything there on Instagram, TikTok, Facebook, all of that stuff. So just type in Steve Medina. I'm sure that you'll find me, and you can get a hold of me there.
Okay. Yep. Good. Okay. Well, I will, and I'll post it below as well. And we appreciate you guys. Yeah, if you've hung on this long for hanging out with us, and we will catch you on the next one.
Thanks, Ryan. Have a good one.
Okay.
We'll see
Thanks.
you.
All right.